Veetina. You're watching Midcap Masala with me, Kanishka Sarkar and Ashesha Dwaryu. Well, time now to put the spotlight on CCL to understand what's really brewing in the space of coffee. And today we are joined by Praveen Jaipurair, the CEO at CCL Products. Hi, Praveen. Very good morning. Thank you so much for joining us today. Well, let's start, talking about the global coffee trends. It continues. The global market remains, challenging, led by surging global prices due to tariff uncertainty and climate-related issues as well. So, how, in your view, is the market positioned at the moment? What is the trend that you are looking at?
Good morning. Thanks for having me here. You are right. The global coffee prices remains to be volatile and at elevated levels. It did soften up, after the Brazilian crop that came in May, June. So the second quarter was a little soft, but then again it kind of increased to higher levels and it remains volatile as we speak. Now everybody is waiting for the Vietnam crop to come in, which is slated to come in or start. The crop will start trickling in from next month onwards, and that's when there'll be some indication that where would these prices settle. There have been conflicting views. On one hand, there had been some floods in the coffee growing region in Vietnam. However, the other view is that in spite of the floods, the crop output is good. But right now, very difficult to predict where will this settle. We are hoping that going forward, once the crop comes in from Vietnam, it should soften from the levels that they are today.
So you expect coffee prices to soften over the next few months despite the 25% surge in coffee prices that we have seen on a year-to-date basis. Mr. Jaipuriar, morning, Ashesha this side. Also wanted your thoughts on the domestic demand environment, and after GST-led disruption, how is the demand environment in the domestic market, and also because of tariffs, is exports a problem?
Two things. One on the domestic demand front. I think, the domestic demand seems to be good. It started to pick up. And largely the GST impact was not so much on the demand, but on the supply side, because there are some disruptions in terms of retailers and traders were a little tentative in buying when the GST changes happened. But I think all that is settled now. The domestic seems to be, picking up. So that's on the domestic demand side. On the tariff front, yes, there has been some challenges because the Indian rates for Indian exports, increased to 50% from 25%. So that had its own challenges. But we as a company, we were quite well placed because we also have our factories in Vietnam. And Vietnam had lower tariffs, so it did not impact, much of our business as far as the US exports were concerned.
So that's about US export, but what about exports to other countries? How is the demand shaping up over there? Domestic, you already mentioned that it has started to pick up. So what's the trend in the global markets as demand started to pick up?
So the global market remains to be good. The good thing about this category that it has seen a lot of I call it a very resilient category. We have seen COVID, we have seen wars, we have seen trade, tariffs and all that. What one constant thing that we have observed is that the demand for coffee hasn't got impacted a lot. So people are still drinking coffee. So the demand front continues to be good. And there are certain developing economies like, the Asian economies largely, so a few of the African economies where we are seeing, because, as in when the affluency in any country rises, the demand for coffee also increases. So that's a direct correlation that we have seen over past many years. So that's a good news that the demand remains to be robust, and that explains why the green coffee prices, in spite of trading at very high levels, continue to trade at those levels because the demand did not drop.
So that's as far as demand environment is concerned. But Mr. Jaipuriar, let's also talk about your domestic revenue guidance. I believe you have given domestic revenue guidance of about 650 crores for this year, and you're aiming to touch 1100 crores in the near term. Which factors will aid this kind of revenue growth in the domestic environment, and any timeline that you can put to these targets?
So we are actually, the domestic guide. We are kind of being very aggressive in the domestic market. not only in the B2C segment in the domestic market, but also B2B segment. We are also driving out-of-home consumption through vending solutions very aggressively. And also, trying to penetrate some of the markets where we were not so well penetrated. So all of this put together, I think we have very aggressive growth plans going forward, and that's the reason we have been very bullish on the domestic front.
So bullish trend on the domestic front is what you are expecting as far as revenue is concerned. But just wanted to get your view, Praveen, in any other planned shutdowns that we could see in the second half of the fiscal, and if so, what kind of impact could it have on your margins? Any revisions that you might have made to the guidance?
Not really. We are actually, we are working on the guidance, and we are still committed to our guidance. And generally, whenever we have spoken to the stakeholders, what we have maintained is that there'll be a quarterly, ups and downs considering the nature of our business. But the fact is that we are committed towards our long-term guidance of 10 to 20% volume growth. And as you know, our operational profit growth is linked to our volume growths, and we have maintained that we will continue to drive 15 to 20% EBITDA growth over let's say a mid-term or a long-term basis. So that's what we are committed on. I don't think so guidance changes, but because the first half was good, probably on the EBITDA growth fronts, we'll land on the upper benchmark of our guidance, which was 15 to 20%. So looks like we'll be closer to 20% than 15%. So that is how it is. But there is no fundamental change in the guidance that we are giving.
Okay, so 15 to 20% EBITDA growth guidance and 10 to 20% volume growth guidance. Am I getting it right?
Absolutely right.
Right. Okay, and you've also been working on reducing your net debt. What is the current position and what is the deleveraging roadmap?
So our debt is now approximately 1580 crores, which is down from 1900 last year. We have worked on multiple fronts, and a bit of softening on the coffee prices also helped. And even when we were speaking last year, I had maintained that, a lot of our debt is working capital, which is, for confirmed contract, and the balance debt is long term for our capacity expansion, which is for growth. And last year were the peak levels, and as and when we are, utilizing our new capacity, the cash flows are getting generated, and it will help us to retire our debt. Looks like from 1580 by the end of the year, we will come down by 200-300 crores more. So the debt should be in the region of, at the end of the year, around 1200-1300 crores. So that is what we are guiding on, and hopefully, quarter after quarter, we will be kind of reducing it further.
All right, thanks Praveen for that. A fairly positive outlook going forward despite the global challenges that remain. Thank you so much for joining us today. It was great chatting with you. All right, with that, we're completely timed out on this edition of Mid Campus Sala. Ashish and I will take your leave, but don't go anywhere. Bye now, sell now, coming up next.